This week was a pretty volatile week um, with those whole bunch of data and earnings. It the market showed that the theme of the market is still AI, with the Meta after the earning, with the guidance, and also with Apple. When the company has a lot of AI momentum, the price goes up. But if the AI seems like not making enough of money to the company like Amazon on the AWS, then the market sells those stock. Um, After the tariffs announcement, the countries basically are investing into the U.S. heavily, and they'll have to sell their currency to buy those U.S. dollar. And if they're loaning the money out into the U.S., that means basically buying the U.S. treasuries. So that made the dollar to go much stronger abruptly, and that caused the assets prices against the dollars to come down. Cryptocurrency stock prices all came down along with it. Now, today, now it's yesterday, earlier in the morning, job data came out, and surprisingly much lower than expected. And it also provided a huge correction, 90% correction onto the last 2 months of job data. That's basically proving that the job data were basically bogus. That's definitely not a good sign, because people were investing into the U.S. companies with the belief that the U.S. economy is much stronger and is growing much faster than the other countries. And even though they had a disbelief on certain things, it showed much stronger evidence not to trust the certain data, because they can provide certain numbers and correct it later that it wasn't true. But 90% is just too much. So if there's not enough job openings, that means the companies are not expanding. And if they're not expanding, that means the company is not growing fast enough to justify the very high equity prices. So that made the dollar strength to retrieve a little bit. So you look at the dollar index, it came down today, and that helped the crypto price like Bitcoin to not go down further and provide some kind of support. But in the stock price, it went down further because the earnings on a certain big company like Amazon didn't provide enough evidence that AI is boosting their guidance. Now, their actual sales and net income and sales guidance was actually excellent, but just because AWS was not meeting their expectation, the stock price pulled down. As I said before, it's all about AI right now. I think the Trump strategy is basically what I said, what I wrote before on the newsletter of U.S. Issuing like 100-year treasury at a 0% interest rate. If you're letting U.S. borrow the money, huge investment, and U.S. is retaining 90% of it, 90% of profit coming out of that investment, and that means basically reinvesting into the U.S. So what that means is U.S. is going to be using those money that they're getting from Japan, Europe, and South Korea and other countries to buy the U.S. Treasury. And when the time comes for maturity, they're going to just basically renew. That's considered as a loan, but the loan that's going to be stuck in the U.S. for a long period of time. I think the strategy is to strengthen the dollar for now, for bringing those investment and using that money to create a very strong base of manufacturing in the U.S. And when the time comes for exporting, they're going to be weakening the U.S. dollar to ease the exporting experience in the other countries. And Trump is very smart in a way of opening up all those markets to set up the base and not clearing the way for exporting the items later on, like asking them to open it up the market during those tariff negotiation. So it's all set in a plan to take care of the U.S. deficit, taking care of the problem about U.S. Treasury, because U.S. borrows so much money, they are not able to come up with some kind of solution for issuing more debt. But now with the tariff negotiation, now they got enough money. Bessent already show some kinds of concern in the U.S. credit market by providing shadow QE, by doing like U.S. Treasury buyback. So in June, they did a 10 billion buyback, and that provided liquidity into the market that helped the stock price go up. And last month they did, I think it was 1 billion or 2 billion again. And on August 15th, they're going to do another U.S. Treasury buyback. These all providing the liquidity into the market, and possibly the reason is there's a credit issue, especially creditors from outside of the U.S. Now, things to watch out is the GDP growth of the U.S. We need to make sure there's enough of growth still, and there's no issue with job and employment data. As long as there's a growth, the price on the asset has a chance to go up. But because it's in the correction phase right now, it may have some struggling time, at least in short term. I believe this created some kinds of support for those Fed chairmen who are waning towards cutting the interest rate. Probably on September they want to cut it, even in the name of insurance cut, just before like something worse happens. Yeah, that's about it. If there's any other interesting news, I'll come back.